Hello, everyone. Welcome back to the RationalInvestor.com's weekend show. This is our broiler chicken show. Lots of fun. Oh, I see showing all the heads. I'll put the heads away. But, if you are a site member and you feel like participating on the inside, as you can see, there's a whole bunch of people on the Hangout. Asking lots of questions, interacting. Of course, I like to do my little sort of quizzes every once in a while. And the people in the lounge, of course, have first go. I think there's a bit of a delay on the YouTube feed. So if you're on the site and you want to pop in, I've posted the links in the lounge there. So anyway, happy Sunday morning, Sunday the 9th of June. Geez, time just is marching on. Just quick heads up, we've got the TRI Vancouver meetup coming up here at the end of July. We've been sending out room reservation emails. It's about 20 people or so that want beds here in Vancouver. And of course, we got all the locals that'll show up, and there's people that have scheduled their own lodgings, Airbnbs, etc. So if you were planning on attending that meetup here in Vancouver and you didn't get the email, then please PM me on the site and we'll get you hooked up with that. And as well, we've got a full itinerary, deep sea fishing, whale watching, Britannia Mining Museum, Richmond Night Market. Really wanted to take in a Vancouver Canadians baseball game for all the Europeans so they could see what North American baseball is all about. But unfortunately, they're out of town, which kind of sucks. But we also got the Anthropological Museum lined up, as well as Vanier's Planetarium, in case it rains. So we've got lots of activities planned for everybody. So if you are planning on participating, like I said, the group's about good 20-30 people so far. Please let me know, PM me on the site, that kind of stuff. And of course, if you're not part of the TRI community and you'd like to come out to some of our social events, I think we have a formal TRI meetup barbecue planned for Sunday. Saturday, it will be the fireworks. So we're going to rent a boat and do a dinner cruise kind of thing for that Saturday evening in the fireworks. I suppose if you'd like to join us and you're in Vancouver and you'd like to participate in that, I think that's going to be a lot of fun. Weather permitting, of course. Basically, just get in touch with me. I sent out, like I said, just sort of the check off if you're going to participate in the activities email. And also, I need a bed. Find me a bed, Brian. Checkbox in there. We've got 3 different houses lined up here, all in relatively nice proximity to each other and in a nice neighborhood. So I think we're good to go there. But I need to know so we can book all this stuff now so we're not scrambling at the last minute. So I just wanted to give a heads up with regard to that. This is our weekend show, and usually what I like to do is I didn't participate in the class this morning, but I did throw up the chat, and I saw you guys in the level 1 program rocking it. So way to go, Grim, representing TRI so well. And it's a little bit of a culture shock for the level 2ers that I work with. Grim is so patient and he's so understanding, and he will just slowly go through things. Sometimes the level 2s get into the class and I'm like, why are you asking these redundant questions? Why are you wasting my time? And it's just sort of like, whoa, gnarly trader talk. Okay. So, bear with me. I apologize. I think a week or 2 ago, I was a little bitchy at the level 2ers, but they were so spoiled by Grim. He's such an awesome instructor. So anyway, I saw that Grim was doing an absolutely fantastic job this morning. But I did see a couple questions, and by all means, if you have any further questions, this is your opportunity to sort of dovetail with what you covered in the level 1 class. Please, this time is for you. If there's anything I can add to the equation to help you understand a little bit more, a little bit better, please feel free to ask. So one of the questions that came out of this morning was, just for whatever it's worth, the YouTube audience right now, the level 1ers are going through your basic introduction to technical analysis. We don't need for you to be like monster technicians coming out of this week's module. If anything, this is more like definitions and understanding some very basic concepts. What do markets in transition look like? And it's interesting because I think over the past 3 or 4 years, I've been teaching this program. I think I could even add some more information to that introduction to technical analysis module. But one of the core concepts coming out of this is this idea that markets range 70 to 80% of the time, and they trend 20 to 30% of the time. So we had one question come out of today. Brian, can you, or Graham, anybody at TRI, please, anybody, can you please talk a little bit about, are there any tools out there in the world that can help us understand the difference between trending and ranging markets? And while it's not specifically covered in the course material, I thought I'd just do a quick little overview of this tool called the ADX, or Average Directional Index, or the DMI, Directional Moving Index. They're basically the same logic. It's interesting because ADX usually has the bull and bear lines on it. But in essence, a lady I actually used to interact with when I was at my old prop firm, she would come on and talk to us. But Linda Bradford Radke, she actually created this setup called the Holy Grail. It is basically dependent on using ADX and a trending market state signal to help her with her setup. And it's simply identifying a trending market state, then pullbacks against simple moving averages like the 20-period moving average, as sort of your trade location tool. And then, your structure, how do you actually place the trade off of the test of the moving average? So really good example. It's interesting here how they have day trading, range trading. This actually a reading above 30 implies a trending market. So these guys actually should maybe clean that up. It seems a bit ironic that that's wrong, but oh well. But the long and short of it here, good example, trending market state. You can see the ADX breaks above 30, implying a trending market. And then tags of the 20 SMA for her are basically buying windows. So a really good example of that setup there. And then, just to show you off of Bitcoin, as I said, you can either choose the ADX, and some charting platforms will call it ADX. Some trading platforms will call it DMI. They're basically the same tool. DMI also has in sort of a who's in control measure. The orange line here, the bears are in control. The blue line, the bulls are in control. And it should be pretty intuitive. You can see, if you see the orange line Wing and breaking higher, then it means the bears are in control. And of course, there's our ADX reading crossing 30. And gee whiz, that's a pretty strong trending signal. And I suppose we could even, just for fun, throw on that 20-period moving average of Linda's, and indeed there is a nice short signal. So that's not bad. And then, opposite scenario, ADX again breaking through the 30 level, indicating a trending market state. In this case, back here in this one, you saw the orange line ratcheting up. The bears are in control. In this case, blue line's ratcheting up. Bulls are in control. Tags of 20 SMA. Actually, that's a 9. Let's maybe change that to 20 so it matches with Linda's setup. All right, so actually interesting in this one, you never did get an entry off of that 20. You gotta have decent entry here. I don't know whether I'd be too impressed with that. I kind of like this action in here, but nonetheless, that's Linda's setup. It's not mine. But with regard to I'll just keep it simple. With regard to ADX, hopefully you can see blue ratcheting up here, bulls in control, reading above 30, trending market state, heading higher. So the gentleman who asked this question, don't know if I'm pronouncing your name. We'll call you Nishi. How's that? So it doesn't sound like a swear word. Does that help you? Lagging, yeah. Markets don't usually start quote unquote trending until they've actually put in like structural formations. Like, remember what I said a moment ago, markets trend like 20% of the time. And you can see that that's not a very big window. They range like 70 to 80% of the time. Can you see how this window is a heck of a lot bigger than this window? And that's probably a really good analogy where markets they're not in trending market states for too long. And then they start to untrend, right? And so you can see ADX is slipping below 30 here. You can see orange is starting to W out and blue is starting to M out here. My hunch is with ADX dipping back below 30 here, what this implies is we were in a trending market state. And now we've gone back into a ranging market state. Does that make sense? Leading, lagging, I don't think, like if you use something like the DMI, which you can see, basically the ADX and the DMI follow the same path. You could use like the W's in the blue as sort of like a leading indicator that the bulls are taking over, and then, W's in the orange as a leading indicator. But the actual trending signal, yeah, you're not going to get that quote unquote this market is trending until this thing actually starts breaking out. And of course that means that M's have come in and things are rocking and rolling. If anything, what I think is sort of happening now is we had this big blast off, and the rally lasted, here we are in June. It started back in April. I remember when Dav and I first did our videos, we were projecting targets up in this sort of 6,000 area. This has been one hell of a run here. And, maybe in the analysis we talk in a little bit further, we'll talk a little bit about maybe this was just a little too far too fast. And now that sort of nutso insano bull market, when moon, all that kind of crazy talk that you hear on Twitter and stuff like that, that stuff is sort of unwinding now. And we're going back into sort of a ranging market state now. Right, so I'll just copy that. And I'll throw it in the lounge. If you want to add that to your records, Niz. Okay, we'll call you Niz. All right. I think, is that you over there on YouTube as well? Nishi. I see Benjamin also has on another link here he's given us for the Holy Grail setup. ADZ says, hi, Brian. Where do I go to do one of your beginner classes? Well, the website, therationalinvestor.com, pretty straightforward. Actually, I'm not quite sure how this works. I thought that if I clicked on this, it takes you to that front page, but that's not the case. But if I go just therationalinvestor.com takes you to that page, and then you can scroll down and you can learn lots about our school, right? You can even click on the school here, and it'll tell you all about the school program, what's involved, how much work's involved, what the sort of duration is, what do we look for, and then the more advanced programs. So the next intake will be in September. So does that help you, ADZ? I hope so. It's therationalinvestor.com/learn. There you go. And we'd love to have you part of the community. And that's actually, it's a good point, and I'm glad actually you asked that, ADZ, because keep in mind, everybody, you have to understand Brian's motivation to do all this is a little bit weird. Believe it or not, I'm on some sort of crazy mission from God. I don't know, God, JoJo, I don't know what the hell you want to call it. And really, I have a really hard time trying to figure out what I'm supposed to do with this life. I know this is going to be the weird part of talking and stuff. But I've done almost every job in the brokerage house. My bank accounts are nice and fat. The demonstration portfolio for the site, we took $500 and it's in a couple $100,000 right now. So it's not like I have to do this for the money. I absolutely love the market. I've been doing this for like 20, 30 years. And it's really cool to watch like new people come in. You can totally tell the people that are traders because they just love the market. They eat, breathe, they drink it, they sleep it. I won't say they have sex with it, but I bet you if it could, maybe we would. But and those are the kind of students that I absolutely love interacting with because you can just see it in them. So I do this because it's my passion. Do I have to do like hour-long YouTube videos once a week to talk to you guys? No. Yeah, sometimes they do. I'm not going to say that on air, though. I have to watch my P's and Q's with YouTube nowadays, Grim. So my number one motivation out of all of this, my number one motivation is to try and make a positive difference in this world. That's my absolute number one motivation. So if I can help, let me help you. We tried, when we first started the education program, I tried to keep it really, 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 really cheap. Now, we do have a pretty big staff now, referral programs, my partners have kids. So yes, we've had to increase the prices, but understandably too, we have a pretty big team, and it's not just this all goes into Brian's pocket. This silly website alone, Jesus, it must have cost us a good $50,000, if not more, to build. It's ridiculous, the price of things these days. If I could give this away for free, I would. But in a weird sort of way, and you all over on YouTube, you should understand this. I learned this a long, long time ago. Actually, my old man tried to teach me it, but I've seen it now even with the people that I've worked with in the crypto community. You will only value this based on the information that's given here, based on the amount of money you have to pay for it. So in a weird sort of way, actually, me doing these prolonged free sessions on YouTube don't really do you a lot of favors if you just are a YouTuber, because you'll watch and you'll sort of half listen, half tune out, and you're only going to value the information based on how much it costs you. And in this case, it's free. So in a weird sort of way, and trust me, there used to be a guy in crypto called Lopro. I don't even know where he is now. His name was Langdon, and he actually worked with me to try and do, and at that time we used to do everything free, and he actually broke one of my cardinal rules on a trade and blew himself up. And for a long time on crypto Twitter and all that, there used to be a meme called "Don't Low Pro," right? Because he literally went all in on a trade, and his opinion was right, and he just got run over. And the market just mercilessly punished him, and he literally blew himself up. So, and he was supposed to be one of the guys that was supposed to be helping me teach the public how to act appropriately in the marketplace. So, anyway, little side story. But the point here is, I just hope you guys, you understand what my motivation is here. You know, if I was in this for the money, there's no way I would be doing like hour, 2 hour long YouTube videos. And actually, a lot of the feedback I get is, Brian, this is horrible marketing. YouTube hates the analytics of this stuff. You're not doing this right. But I'm just having fun. So what the hell? Well, that's good news. I appreciate the compliment. Thank you. So, but anyway, okay, so let's. I wanted to talk to the current level oneer who asked that question. So that's what that conversation about Holy Grail was. You know, just to sort of keep the message relatively simple for you guys. You know, on the site, we watch the big three. You know, maybe we call them the three horsemen, the three stallions. I don't know. Bitcoin, Ethereum, Litecoin. I distinctly remember I did one of these videos about a week or maybe a month or so ago, and I said that I liked on a risk-reward basis the Ethereum trade because it was closer to the bottom, and somebody went, "Oh, does that mean all in?" And I was like, for heaven's sakes, no. And this is why. You know, unfortunately, the FOMOers, all the panic buyers, all the moon talkers, they're all chasing the market up top here. And I even saw, you know, just for fun, I was, you know, because as you can see, I get tons and tons of messages from site members asking for access to scripts and stuff like that. So I get tons of messages. And so I just happened, just for fun the other day, to pop into the Trading View Lounge. And these guys were all like, man, Litecoin, man, Litecoin. It's just like, oh goodness. And I even try to refrain from interacting in these just because it just drives you crazy. You know, people just, they don't get the message. And also, too, TradingView got really bitchy at me about providing my education programs and stuff and threatened to ban me if I mention them and stuff. So I just simply said, you know what, I don't need this chat, you know, goodbye. So I don't really interact on TradingView anymore. Anyway, okay, so, you know, I like to watch these three sort of, and these are weekly charts, so it gives you a nice broader perspective. So if we just look at some really basic levels, and we'll take the corn to talk about today, you can see all of three of the horsemen are basically looking very similar. But if we look at the corn, I mean, everybody, if you don't know this, right, W's are the key to this game if you're thinking about buying. And of course, M's are the key to this if you're thinking about shorting. Or selling, and I suppose we could even off of the original top back a year or two ago now. If we change this to a line chart, you should be able to see the M pretty clearly, right? Up, down, up, see you later. And actually the level oneers, they're doing this right now. What do markets in transition look like? Usually they look like M's, or if they're bottoms, right, they look like W's, right? And we can even change that to a line chart, and everybody goes, oh yeah, there's the W. Down, up, down, breakout. So, you know, in this game called investing, trading, whatever, the key to us is really, if you're going to risk your hard-earned money in the marketplace, are there any sort of key market in transition levels which give you sort of a reference point of where you can enter, where you can risk against, and if those levels are broken, well, you just simply, your thesis that a bottom has come in has been disproved. If you go and buy, like, say, like right here, right, where is that area where you're going to be proven wrong that this isn't a bull. Well, believe it or not, that's a break of the W. So if you do go and buy here, what that means is just to, are we still in an uptrend? That means you have to be able to risk all the way down to here. I'm not saying that you should do that. In fact, I would say you shouldn't do that. That's very dangerous. And that's why it's so important for us to understand the concept of W's. And, this signal, if there was one, was to buy here. So then that way, your window of is my thesis right or wrong, and I'll be disproved that my thesis that this is a bottom is wrong, is this window. Nice, friendly risk window. I can handle this kind of risk, right? And if this is wrong, you just simply have to man up or woman up or whatever and just walk away. If I go and buy here, and I got to be able to handle that kind of risk, I might lose my house. That's a lot of money, right? And then, of course, if you did buy here and you have to handle being able to risk down to these lows, you might be sitting underwater for a very long time as this thing just swims around and decides whether this is actually a bottom or not. So, I always like to start at the weekly charts for sort of like investors. Keep it simple, stupid. I don't know whether you guys on YouTube have ever heard this before, but, the site participants, they hear this out the yin-yang. Weekly W's. Weekly W's. They are the most powerful sort of, all right, at least we've got some sort of bottom in place here. And so if I look at this chart and I ask where is the weekly W, it was sitting down there at about $4,000. I was actually really pleased to see that a whole bunch of people on the site are banging out doubles. Benjamin, you got off a couple doubles here this morning. I thought I saw at least one. But, constantly through the weekend, it's so beautiful. Like, people are actually using this information and making money. And long and short of it here is if you had bought this weekly W, that's basically 4,100. Does it make sense that at 8,200 here, boom, you got yourself a double? Merry Christmas. And in a weird sort of way, I actually think that this trade and the end result was actually quite manufactured. And it shouldn't really surprise us that once we get up into that sort of double area, that all of the pros that bought this W are going to be selling half of their position, getting their original money back in their pocket at the very least, and establishing a risk-free trade. I mean, isn't that sort of the best way to play the market? Have risk-free positions? I think that's awesome. What was that coin that you banged out a double on this morning, Benjamin? Just for illustration, I'll show it here in the video. And of course, I love on the site when somebody bangs out doubles. We've got our, I love that picture. Doubles, it's nice. And actually, Tanjay, where are you? Tanjay, we need to know if we need to reserve a spot for you in Vancouver. So I hope you're watching this later on, Tanjay. Sent you an email for the list and all that. But what was it? Yeah, look at this one. Wow, what a move. Second double of the day. Way to go, Benjamin. You are the man. This was GXS. I have no idea what this is, but let's see what we got here. GSX BTC. Doesn't come up here. It's on Binance. Oh, GXS. What did I type? GSX. Oh. Dyslexia for the win. There it is. GX coin. Wow, look at that beautiful chart. Well done, dude. Interesting, nuance of good old crypto and these crazy ass tails. If anything, not a bad idea. Just wait for some sort of signs of W. Hopefully everybody looks at this and goes, oh yeah, I think I can see a W. All right there. where the market went down and then up and then down, and we might W, and no, we made a new low, and then down and then up, and then okay, we might W, down, up, down, breakout. So that was at 1435. And the great part about it is you can see that the indicators all started Wing here. This we might even like to call this a Davo as well. And also really good analogy. And I'm not quite sure how we would interpret this crazy ass action, typical old coins, but hopefully you can see also that the market was making lower lows and things like momentum indicators were making higher lows. And here comes that divergence signal right in here, and that was that pop there. So divergence comes in. Now we can start hunting for W's. Give me a W to work with, and woohoo! Great trade, dude. Brilliant. Sexy. Nice job, man. I suppose the only other sort of missing ingredient to this is, was there any sort of fundamental driver? Was there a reason that all this buying pressure came in? And usually that's, if we can couple, like if you knew that maybe they had a new, I don't know, version of their blockchain, or, maybe they were going to, be a cornerstone presenter at a conference. Maybe they were going to reorganize. Maybe they're going to get listed on new exchanges. That happens a lot. But it would be really interesting to see what the fundamental reason all this buying pressure came in here. And this is kind of cool too for the sort of traders out there, aside from sort of little old ladies. Hopefully you can see this is a nice LJ. We shouldn't say her full name. LJ setup. 1, 2, 3. Ooh, breakout of that trend line. Nice market structure on the other side of the trend line, and woohoo! It's a great example of a nice momentum breakout here too for trend lines. Good stuff. Nice trade, man. Nice trade. And really, this is basically what we teach people, right? Yeah, and actually, we've been suggesting that on the site recently, and any site members watching this, I've actually gone and added a few of those sort of fundamental screening tools to the library. So if you want to, before you pull the trigger, want to be a rational analyst and say, well, Brian, I appreciate the W's, I appreciate the divergences. I'd like to quickly just take a good look at the story. I thought I had the other one on here too. But I've added a few of these crypto screening sites that can sort of give you sort of a broader market. Not weird. I thought I had it on here. Anyway, sure I did. I'll add this later on tonight. But there's also this coin. Which one was it? It was like coin checkup. This is a good one to use. It sort of gives you like fundamental screen. Like we had another one that popped here. I think it was VTC. I saw a lot of people on the site banging out wins on this one. You can see a really nice rally there. And, 3.8 out of 5. I suppose that's not bad. 49 million out of a total maximum supply of 84 million. Yeah, it's okay. I'd just be curious to see what your GXS is. Let's see if it passes mustard. Now, also remember, too, that these sites, the way they come up with their fundamental screens, there are a couple of people on the site that are kind of like, yeah, take these screens with a grain of salt. I know there's one site members like, do the coin market cap checkup, right? Don't just go off of just one algo score. They're giving a 3.7 out of 5. I suppose that's okay. What you really want to avoid are like the coins that just have absolute crap rating. The Schult coins, I think we're allowed to call them. can't swear because YouTube is getting all over me on adult content in my videos now. But the point of the matter here is not a bad idea to do a little bit of just, I would call this more like quantitative easing, quantitative analysis, because they come up with these algo scores based on things like social brand name awareness. I thought they had like they had like a social score on here and stuff. So, and those kind of analysis methodologies are what we call quantitative analysis. They're not necessarily fundamental, more sort of like what sentiment is. Think of quantitative analysis as sentiment analysis. So anyway, point of the matter here is, there are lots and lots of ideas out there. You just got to build your plan. You have to get in touch with what type of risk taker you are. You have to create your tactical plan within your sort of overall plan that's going to identify what market you're trading, what your style is, what type of risk taker you are. So that defines, how active you're going to be in the market. And then also, how you're going to manage positions, risk, etc. Look at this. They're even pushing it higher even as we talk. Usually as soon as I start talking about these ideas, they stall out. So let's see. It looks like they're going after this high here on Binance. 32.63. So we might see a bit of a pop, 32.70. So they just took out that high. Let's see if they pop this thing by the end of the show. Benjamin, you might get another double off on this before we're done here. And for heaven's sakes, especially YouTubers watching this later on, don't go and buy this now. You can all see where the W is. It's down here, not up here. So maybe on that note, why don't we backtrack back to Bitcoin? Somebody was asking, and the big three. Somebody was asking me the other day, can I go and buy this here? And the simple answer is no, you can't. Now, the one good thing I like about the Bitcoin market right now, and all three of them, as it stands right now, we don't really have any, keep in mind, this is a weekly analysis. We don't really have any signs off the weekly charts of failure here yet. So that's good. And also, too, Litecoin has its big halving event coming up here in the summer. So as a result, especially into that event, I find it really hard to believe that we're going to roll over and go into a bear hard here. What I am worried about, though, is what do tops look like, and there's one chart in particular that I've been throwing around, which is really interesting because it got a lot of really negative feedback on Twitter and stuff, which in a weird sort of way actually validates that it's probably the right thinking. But what the hell is it? I think it's crypto. Gold. What I'm worried about is, I don't think the market's broken down now. I can definitely feel comfortable in that. But as we sort of move through Litecoin's halving and all that kind of stuff, and we work our way through the summer, what do sort of, these tops sort of look like? And hopefully everybody can see this was I like to use the analogy that gold was the greatest generation sphere cycle proxy. It was the new product for the baby boomers when they were going through what the millennial generation is going through right now. So just think about this, all you millennials eating your avocado toast. The previous big demographic glut, the baby boomers, the futures market and investing in futures on gold and options on gold and silver and all that kind of stuff, that was all the rage back in the late 70s, early 80s. And of course, this was that generational cycle's fear apex. And what I noticed, of course, this cycle, of course, is Bitcoin and crypto was this generation's sort of new product. And I might argue that there's a lot of similarities here. And what I'm worried about is, like I said a moment ago, I don't think that the top is in. And based on a weekly charts, you can kind of see here in gold, when it had its dead cat bounce off of its lows, it slammed into 38.2. And we really can't even comment on whether this downtrend is over yet until we actually resolve 38.2. This is a really important statistical fib level that sort of determines whether the bear is done. And if that's the case, then we'll W out here and blast through 38.2, and then we're back in a ranging market state, and we're no longer in a downtrend. In gold's case here, you can see we had an initial burst, which is, gee whiz, looks very similar to what we just saw out of Bitcoin here. We pulled back, and that's where I think we're starting that process of the pullback right now in Bitcoin. We tested short-term support, things like 13 EMA off weekly charts, and we pushed to new highs here in the gold. And you'll notice that that push to new highs, the momentum indicators did not go to new highs. And that's the key that we're looking for. Just like when we talked off of setups for the bullish setup, this is a bullish setup. And there was a tell that the bull was getting ready to rock and roll because price pushed to new lows, but the momentum indicator did not go to new lows. Right? That's a bullish divergence. In gold's case, back in the 1980 pivot, you can see, and we'll just zoom this in a little bit here, right? You can see that the market pushed to new highs, right? But the momentum indicators did not go to new highs. And then also, too, you can see very briefly, we got a beautiful M, think, all the Da Vinci fans think Davos, right? When you get M's in your oscillators like this. And I don't know, did Willie actually get stupid? Oh, it came so close, minus 20.7. We officially say that the market is officially overbought or oversold if our Willie indicator, which is a heavily modified Williams percentage R, gets above minus 20. So it just about got there. Not quite, but nonetheless, lots of warning here. Uh-oh, this looks troublesome. M's in oscillators on divergences. And then when the market broke here, boom, the divergence confirms, and you go, all right, that was a 38.2 failure. And on a divergence, and gee whiz, the end result was this mess. Ugh, yuck. Now you'll notice that we came back up, and I mean, it took a long time. We came back up to the 38.2. Are we ready to go now? And uh-oh, look at these divergences. Yuck. Nope. Get your butt back down there. And then, I mean, this went on a long time, right? And then finally, we got up to that 38.2, right? Which I guess would be up in here. And we blasted through that, and yep, I'm a bull. Look at me. Woo, away we go. And actually, you could even argue by the time we got down here, you could even drag the fibs down lower, which would actually imply 38.2 off of this area. And I think this was sort of our official transition into I'm a bull. This took forever, 17.5-year fear cycles, all that kind of stuff. I don't know if Bitcoin has to take as long. I did notice, though, just interestingly enough, that Bitcoin seems to move at a bit faster of a pace. And then also to keep in mind, in this kind of environment, 1 ounce of gold is 1 ounce of gold is 1 ounce of gold. Doesn't really change too much day to day. And it stayed sort of a store of value story, right? It's not like you could go out and use gold on a daily basis in our society. It's interesting. Like I lived through this time period, and I don't remember any store saying, "Okay, we're going to start accepting gold in payment." It was still very much a dollar centric world. Bitcoin, on the other hand, of course, if we just sort of look at it, we've got this really nice bullish weekly divergence, which basically painted that rally. What I'm worried about here, of course, is if we do have the pullback, which we are expecting, and then we go to new highs, which wouldn't surprise me one bit, and through this push to new highs, everybody's saying, hodl, 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 moon, moon, moon. The rhetoric is just going to get absolutely blistering. But unfortunately, what I'm worried about is that push to new highs does not come on a new push to new highs in momentum. And you can see our overbought or oversold indicator. It's starting to get up here. It's sitting right now at minus 26. It's still got quite a bit of room to get up to overbought. And sometimes this indicator can sit overbought while we go through these face rips. So, Willie being overbought in itself is not a justification for a trade, but it should just be like a warning sign to us that, hey, we're probably closer to the top than we are the bottom. We're not there yet, and I think this still is developing, but this is my worry, and of course, I love to worry. Also, remember, too, everybody, Brian's usually right, but he's usually early. Remember that. I think that's a really powerful concept. Even write that down. Brian's usually right, but he's usually early, which means that sometimes I sit there and go, yeah, well, not yet, not yet, not yet. Drive you crazy. But anyway, the point of the matter here is, I've actually taken that gold sort of rally scenario and 38.2 test scenario, overlaid it over the chart, and let's see what happens. If we go back to that weekly chart, and where should sort of short-term support come in on the charts? Let's do this one here. I love the 13 EMA. It's kind of funny because there's only one other market participant that I've seen that actually follows the 13 EMA, and he's an old gnarly dude. He's even older than me. And I was quite pleased when I saw that he was like, I'm a big fan of 13 EMA. So anyway, it works as sort of a keep you honest indicator. You can see through the full bull market. Don't FOMO. Wait for tags at 13 EMA to get in. Don't FOMO. Wait for 13 tags at EMA to get in. Don't FOMO. Wait for 13 tag at EMA to get in. Blah, 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 blah. And then also, too, when we actually eventually lose 13 EMA, as I had said earlier to start off this broadcast, what a coincidence. That also corresponds with sort of M's in the market. We're now in a bear. And then on the bear, and the interesting thing about this, hopefully everybody can see, is that literally the market rallied up, came back to the 38.2. Am I still a bull? Rah, 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 rah. And in essence, lost that 38.2. I'm now no longer a trending market state. I'm going into ranging market states. Now, what's so cool about this, ranging market states, level oneers, you'll learn this like reload zones. I often see this happen. So often is the market eventually ends up actually bottoming right off 78.6. It's just stunning how it does that so consistently. And that's sort of what I'm thinking, going back to our gold sort of conversation, is you notice that gold did exactly the same thing. Gold actually had to lose this low, nice FU move, right? But ultimately, the bottom happened to come in off that 78.6 fib level right there. So my hunch is, for whatever it's worth, the ultimate bottom in Bitcoin will probably come in off of this sort of 4,500 area. And then also too, if we think about things like halvening events and stuff, keep in mind this forecast is actually looking at like a couple years. We're gonna have the next halvening event. I've seen lots of people on this site talking about what is the cost of production for Bitcoins. I'm seeing a lot of sort of the current cost of production is around $2,500 to $3,000, somewhere in that area. So if we go through another halving event, then that number goes from like, so, 4,000 ish up to like 6,000 ish. And if we ultimately down the road see the technical bottom happens to come in at around $4,500, gee whiz, what a coincidence. That's basically going to be in and around that cost of production level. And that's really what should happen with commodities, is they should ultimately bottom when all of the weak hands get washed out of the market, and especially with commodities. And the only real participants left are the people that are supplying the market with what it needs to survive. And keep in mind, when it comes to Bitcoin, Bitcoin only needs one thing to keep going. All the talk about 10, 20,000, $100,000 a coin, whatever, that's meaningless. That's all. You know what the worst part about all that is that's, and if anything, I think this going through this phase gets rid of that, that's like people that participate in crypto, that participate in Bitcoin, not because they're really big crypto fans, but because they want to buy a Lambo. They want to, I'm a Bitcoin billionaire, suck a dick like I just don't care, whatever. Oops, YouTube's going to shit on me now. But anyway, the point that I'm trying to make is that, from most of the people and most of the moon talk and all that kind of stuff, they're from the people that want to get rich, capital gains, right? And have their hookers and their mansions and all that kind of stuff. That's the people that are talking that way. If you actually talk to crypto enthusiasts, it's so cool. Like there's one guy, Draper, who actually won the Bitcoin auction back here. And I remember when he did, because right after he won the auction, the market just fell apart. But Tim Draper, he bid for the Silk Road seized coins from the U.S. Marshal's office right here. And I love his attitude. He says, like, I don't even look at Bitcoin in price. One Bitcoin is one Bitcoin, right? And ironically enough, his argument is, it's not that Bitcoin price is volatile. It's all the fiat currencies are super volatile. Bitcoin, just one Bitcoin is one Bitcoin. So those kind of people, the only thing that matters to them is, how do you keep the network going? That's the only thing that matters. Everything else is irrelevant. How do you keep the network going and Bitcoin just doing what it was meant to do? Be a permissionless ledger that is bulletproof, and can't be manipulated by central banks and diluted. It just does its thing. It is Bitcoin, and it is a permissionless way to move, tangible value across the world without some third-party intervention. That's the big selling point for Bitcoin, in my opinion. And when it comes to that, the only thing that matters is the miners have to be able to make a profit. Can be even a small profit. Now, through this kind of nutso market, obviously their profits were just ridiculous. And if anything, you want a nice little tool to sort of keep you honest in this space. A lot of people put this together, this sort of network value transaction. Who can, in the lounge here, who can write out the actual, what NVT actually stands for, so I actually say the words correctly? But this is a really good analogy of, maybe things fundamentally are getting a little bit ahead of themselves. This was that, 2017 networks clogging up. And it was ridiculous. I went to a conference, of course, locally here in Vancouver, and the room was absolutely packed with people. Oh, I want to get rich. I want to get in Bitcoin. I want to get Bitcoin. And you actually looked in it, like the backlog, it was like something over like 100,000 transactions backlog. I'm not quite sure how the backlog got last summer. I was traveling around. Shane says, standard NVT ratio is simply the network valuation divided by the transaction value. Thank you, sir. I can't say that every time I pull this up, though. What does NVT stand for? Is it network value per transaction? Something like that? But I appreciate the help there, Shane. I appreciate that. So, and I noticed just recently that they were starting to talk about the network getting clogged up again. And does anybody remember just off the top of their head, what was the backlog through sort of when we were up there at 9,000? How bad was it getting? Somebody was saying it was getting pretty bad, like something like 50, 60,000 transactions were being backlogged. 60,000. Thank you, Shane. Awesome. So, that's another sort of little tell that, hey, maybe things are getting a little out of themselves. The problem is nobody likes to listen to fundamentals. Really great analogy of fundamentals. During the dot-com days, I've worked in the stock market forever. And for years and years and years, we always valued stocks based off price-earnings ratios, price to book, price to free cash flow, things like earnings growth rates, the PEG ratio. All you level oneers, you should have just gone through that. Price to earnings growth, price to earnings, PE, price to earnings, price to book, all that kind of stuff. Then in the dot-com boom, a whole bunch of companies started coming out in the market, and they didn't make any money at all. Negative PEs, zeros. And yet the stock prices kept going up and up and up and up and up. And you're like, why is this happening? The only way you can actually explain why it was happening is my demographic sort of trend model. And that was a classic greed cycle peak. But what was really interesting through that was that all the analysts stopped using the classic measures of value in the market, PE, PEG, book value, etc. And they started using terms like EBITDA, earnings before interest, taxation, depreciation, and amortization. Oh, Jesus, what a headache. And they were able to justify these stocks going higher and higher and higher because they just simply didn't like the classic fundamental analysis models that were used and created their own new ones to justify the price movement. So, I like this as a study of just sort of keep it simple, stupid. Let's not, sugarcoat this. If this is giving us warning signs, maybe we ought to temper our enthusiasm. I do understand that there was a bunch of people that were using that sort of data and thinking short, but the problem is, from my perspective, the market was actually starting technically to give us lots and lots of sort of little warning signs that technically it was just way overdone on the downside. And remember, I showed you that divergence concept off of Benjamin's name. I think also I mentioned this off of Bitcoin. When you start getting things like bullish momentum divergences, this is a great analogy. When Willie goes stupidly oversold, maybe you ought to start tempering your bearish enthusiasm. It doesn't necessarily mean that Bitcoin is going, straight up and you got to buy, but at the very least, maybe you should just go, you know what? I do like the short idea, but being short down here with, Willie's starting to put in W's being oversold and the MACD divergences all coming in and stuff, maybe you ought to cool your jets. And then, of course, below reload zones, maybe the shorts ought to just cool their jets. And sure enough, boom, we pop back up. So the way I'm sort of looking at this now, as I sort of said, is, fundamentally, I think we're getting lots of sort of little, hey, things are getting a little bit heavy. You can see how all the people that did buy this W, they got their free positions, classic market trade, nothing really out of the ordinary, just a really good, solid sort of almost manufactured trade. I like to follow the 13 period exponential moving average and 30 period simple moving average off of the weekly charts to give me sort of like trend direction. And as you can see, when we failed up top here and then we started continually failing, that actually started giving me a downtrending market signal. And that downtrend, oh man, that was painful. So it was nice to see that we've sort of broken that downtrending and sort of signaling uptrending type market. Remember, too, that conversation we had about gold. I think we're sort of in this phase right now where we're having that pullback after sort of the dead cat bounce straight up. And if I was looking for some sort of support of where, okay, maybe the pullback off of the dead cat bounce has played itself out, where should that come in? And, we can look at them across the board. Here's Ethereum's. There's the 13 period exponential moving average off the weekly charts. And lo and behold, here comes Mr. Ray Burchett's 38.2. So you can sort of see how they're aligning here. This 212 area, we might get some like big FU wick tail tag 50% rule. That would be very normal. We also have $200, big fat round number. I think that's perfectly realistic. If we look at Bitcoin, keep in mind these are the forward contracts on OKCoin, so your spot market might look a little different. Same sort of logic here. I mean, really nothing out of the ordinary. 38.2 off of that weekly range. Hopefully you can see that. Sitting 69.37. There's the 13 EMA. I showed you on the way up how the 13 EMA off the weekly worked excellent for sort of, okay, pullback's done. We can start thinking about getting long. Pullback's done. We can start thinking about getting long. In this case, we went a little bit further, but you notice that the market came right back and just settled in 13 EMA. Pullback's done. We can get long. So I'm thinking over the short term, this sort of 6,200 is the 50% level. 69 and change is the 38.2. And there's the 13 EMA sitting, where the hell number is that? That is sitting 65.57 right now. Seems perfectly realistic. I don't see anything shocking. And the irony of all of this is that, especially new people to trading and they're seeing, they pull up like, say, like like an hourly chart, and they look at this and they go, oh my God, this guy is falling. We're just going straight down. We're going to collapse here. Well, not really. This is actually pretty normal. And, for all those investors in the Bitcoin story, I think you should start with your weekly price charts and just, pick your levels off of the weeklies, right? If I was drawing levels off of the weeklies right now, I would just simply say, I think the market is range bound between the high there of about 92, 9,300 and the 38.2, which is about 6,900 or 7,000. So just to make it really simple for yourself, you go, okay, looks like we're in a trading range, and we will know whether this range has completely lost it if we actually end up rolling over and losing 38.2. Now, as I had said earlier, if we look at our gold chart, I don't think that's going to happen, right? And actually, in fact, let's take a look at this. If we do that same sort of weekly talk, there is reload zones. This thing actually came down all the way down to 50% level. Interesting how on the gold chart, they actually left a cheeky little gap that needed filling in there. So we might dip a bit further here. It wouldn't shock me. But notice there's 38.2. Look at the battle here. So we went zinging beyond it. Then we went zinging back above it. Then we went zinging back down, tested those lows. And then we went zinging back up and rallied up to new highs. This is actually what I think is going to happen for us here in Bitcoin. Is we're going to see a zip up to new highs, right? And like I said, all the moon hodler people this is going to be their revenge, right? And they're going to be like, I told you so. Don't listen to those damn technicians. They suck. The key will be on the weekly charts if we do break to new highs and, fudge, that's not what I wanted. If we break to new highs and momentum does not, that will be sort of the, oh shit, this rally is running out of steam. And we got to look for this kind of crap on the other side of it. I hope it doesn't happen. Hey, I'm a bull. All right, let's go. Bitcoin boom. Man. But I don't think we can really even start having those kind of conversations until this 38.2 battle has been resolved. So actually, and it's interesting too, notice here 30 SMA, and keep in mind they're pointing bullishly now. So the trend technically is up, but interesting how if we just do our fibs, and remember how that gold had to dip all the way back to better part of 50%. Yeah, same sort of thing. 38.2 is going to line up with 13 EMA, but notice when I put on all of the levels, there's 50%, there's 30 SMA all the way down here at reload zone. I mean, maybe, you never know in this crazy game, maybe we get some sort of big FU candle that does something like that. That could easily happen. But I think, we needed to respect the fact that we were bumping up against 38.2. That's problematic. We're, in previous sort of videos that I've done with the public, we've talked about, all right, if the market's moving up and you're looking for where the market's going to run out of steam, we want to look left, right? And so we see those highs, and really what I think the market ran into was it ran into this high, and it ran into this high, and they just said, no, that's too much. And then also, too, like I said, anybody who actually bought this W, they got themselves a free position by selling half. That is like bread and butter stock market, little old lady, keep it simple, stupid, portfolio manager strategy. Anytime you can sell half on a double, basically you have no risk on the rest of the ownership, and I think that's exactly what's happened here. Now, if the scenario is that we're going to continue trending higher, then really what I want to see is some sort of consolidation, kind of like what we showed you off of Benjamin's kick-ass trade. I want to see some sort of like trend line that's established, and we start breaking the trend line. And that break of the trend line, we get structure on the other side of it, and that's on divergences, and we get things like W's in our momentum indicators. And this happens to be volume momentum and price momentum. If you can get W's and price momentum and volume momentum simultaneously, oh, Nelly, or should I say, oh, Davos. Yeah, and hey, the proof of the pudding is in the eating. I mean, you can see what happened on the other side of this. Like, holy free holies. So, that's what I want to see for me to go, all right, we're going to rock and roll here. So let's go look at that daily chart. Let's see if Bitcoin's even anywhere near there, right? We've got the top. We've got the pullback. We're coming into support. So I still think this is the pullback. I still think pullbacks are buying opportunities, all that kind of talk. Let's see if we have anything that even remotely resembles this kind of image on Bitcoin just as of yet. And hopefully you're probably all going to sit there and go, I doubt it. Let's go this one. All right. So I've been posting this chart out on YouTube for a while. YouTube, Twitter, all that kind of stuff. And actually, I think I even I go here, and I go here, and I go here. All right, and there is the broiler chickens tweet. Yeah, so you can see I've been tweeting these images out. This is Bitcoin. And how ironic, right? How do we know? CNBC comes out with a buy recommendation. All we really have to do is just ask, okay, where are their stops? And if I'm not mistaken, I think their stops on their trade, somebody can find that tweet. I don't know where it is, but I think their stops are like 7,100. So how ironic, there's our 13 EMA sitting 65 and change. The 38.2 off of that range, 68 and change. So basically what that means is they're going to politely stop out all the CNBC people, and then they're going to put in a bottom and rally it up. But anyway, I digress. The point of the matter here is I've been putting these charts out. Does the Bitcoin chart as we speak right now, does it look like this? I'm getting ready to rock and roll. My indicators are all pointing up. I've got divergence. Away we go. And the simple answer is no. Unfortunately, and here is that Bitcoin chart now off of the dailies. And what's really cool about this, I mean, you never know exactly what tops are going to look like, but I often find that this is what we call a diamond formation, extremely powerful. I could go back and show you a bunch of diamonds on Bitcoins. When these diamonds come in, like there was one that was done off of the SEC's initial rejection of Bitcoin ETF, and that was a huge pivot for the market. There was also another diamond put in way back when Microsoft originally announced that they were getting into Bitcoin. That was 2015 or so. Really good example of a diamond, and price had to come off. But here is the latest diamond du jour. And what's really cool about this is if you actually do a market symmetry study and think about like the Canadian maple leaf, how it looks like very symmetrical. That idea of fractals, you can see very well-defined head and shoulders type fractal that's developing here. Now, you never know if it's going to play out this way. Nobody does. But nonetheless, it's not a bad roadmap for me to sort of keep in the back of my mind of what I'm anticipating happening. And you can see where we are right now, right? We did the dump, which corresponds with that low. We tried to do counter trend rallies, which corresponds with this counter trend rally here. And unfortunately, we might have to prepare ourselves for a pretty big thumping here. And that's what this candle and this candle looks like. And you can see the price action as it's happening right now. That's sort of what I'm thinking we're going to have to do here. So we'll put the symmetry study in the background for now. I think, especially off of this diamond, that we're sort of stuck in this channel. And, just simple trend line off of the tops. Trend lines validated on a break of this low, M top. Until this channel is broken, I think that this is very easily our trading range, and it's a downward pointing range. The interesting thing is off the dailies, there's that 38.2 Brian's talking about, good old Ray's barbecue level. I think that's very doable, right? And all that is just a tag of this sort of midpoint of the channel right in on these levels. Nice little FU move that'll validate Ray. Interestingly enough, this was also on a massive bearish divergence with Willie very stupid. We also have a confirmed OBV divergence, which is quite concerning. They always say volume leads the market. They always say volume speaks volumes. Sort of your tell that there was trouble with this rally in the short term was we went to new highs here, but notice the buyers just didn't show up. Right? Buyers doing lots of buying in here, buying. And then there was a seller that came out and said, "Oh, screw you, we're going down." And then the buyer said, no, more buying, right? No BVs pointing up, W's, buying. But notice that when we pushed up to this new high, where are the buyers? That's a bad sign. I suppose a good sign that the market, again, thinking weekly trend is up, pullbacks are buying opportunities. we haven't really seen the sellers really accelerate here, which is good. And let's keep those bears and those sellers relatively calm. And as long as this sort of stays muted, the way I actually interpret this is nobody's driving the bus right now. The bulls have kind of quietly gone to sleep, but the bears also are potentially going to sleep. And actually, we'll even get an outright signal that the bears have fallen asleep if we get a volume bar, a red bar less than this 7.41 million coins. You notice that yesterday we did 7.003. So we could actually technically argue here that this market is just drifting right now. Nobody's really taken control. Now, you never know. By the end of the day, we could see, and I've often told you this on Sundays. Sometimes we get some really wild action after I do these videos. We could see these lows hold, fingers crossed, and the market turn back up and break this trend line. And that's sort of like this kind of conversation, right? Do we actually get trend line breaks? Until that happens, though, I have to just sort of say, look, we've got the diamond pattern working. It's really interesting off of the diamond pattern fail. I was tweeting out 13 EMA fail there. Not a bad trade location. With the confirmed bearish divergences and Willie being stupid, this is actually what we call an El Tangonator setup. We used to call it a Hollywood Nick. Why do I keep changing the names of these? Well, it's just people that are active on the site and that really happen to like these. El Tangonator happened to be one of our buddies from South America who really loved this setup. And so we changed the name of the setup to him. It doesn't really matter to me. I mean, the point of the matter here is bear, div, and MACD, Willie stupid, structural signal, go. And El Tangonator happens to be the name that we're giving this setup right now. I always kind of like Davos, right? I always tell everybody, my job is to try and make you famous as my students. And I think we've done a pretty good job. I mean, Dav's, of course, done a wonderful job on his own. But anytime I can endorse Davo signals, and all of you YouTubers, you should be watching for Davo signals. They are extremely powerful. In fact, the ETH short that was also on this tweet, it was a Davo short. And it actually just had its profit objective hit. So here is that ETH chart, and same sort of thing. Where are the buyers? We push to new highs in price here, but there's no buying pressure. What the hell? There is the bearish divergence in MACD. There is Willie officially stupid. And then you'll notice up, down, up, failure, up, down, up, failure. We actually got a nice Davo sell signal off of this inside bar failure. This is also known as a fractal. And his strict rule of how he traded his Davos was you take the signal and you shoot for 2-to-1 risk reward. And as you can see, ding, 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 he just got his fills. Could this thing work its way down into 38.2s and 50% levels? I think so. But nonetheless, really good example of a Davo. Really, really good example. And it just had its profit target hit. Same sort of conversation as Bitcoin. Right now, again, what I was sort of saying earlier, weekly signals, and if we look at the Ethereum chart, if we were wanting to get in on Ethereum, what level, they've turned up. The trending signal is flashing bull. If I wanted to get in on Ethereum, where should I be thinking? There's the original double bottom. There's the 13 EMA. We can do things like fibs. There is 38.2. So just like, we were talking about with Bitcoin and all that, actually, this doesn't have enough data to show us, but you can sort of see 13 EMA tags entry, 13 EMA tags entry. Even this year, 13 EMA tag entry. Market went ratcheting all the way back up top there. So here we are coming into a 13 EMA window with 38.2s and basically the original market structure. Now I can actually start thinking about, okay, if I want to invest and I want to take my shot, I'm starting to come into a potential trade location. So it's good to see that basically, in this kind of scenario, we're like, okay, who's driving the bus here? Are the bulls in control? Are the bears in control? And just like Bitcoin, although it's not nearly as well defined, really, I think this is just in drift mode. And we'd really like to see who's going to step up. And if we got a nice big green candle, big green buying bar here, that might actually put in a W in OBV. Looking at things like Willie, though, and I also have on here RSI in the background, I don't really see any signs of bottom. You notice here it took, as it was going into free fall, that would be sort of like here. And it took, I don't know, what is that, a couple weeks, right, to actually carve out a W and start working its way higher. That's sort of what I think is going to have to happen here. Also, too, in the stock market, and I still think to a certain degree, crypto is a risk asset. So I know a lot of people don't like to think of that as that. I think there is a lot of correlation between, especially the senior crypto names, the junior crypto names, the shalt coins. I think they actually act very much like the bulletin board stocks, and just go in the pooper when the market finishes its trending higher state. But for these more senior names, I think they move very much in conjunction with the broader sort of risk market. And typically, the seasonal bottom comes in on the stock market somewhere near the end of June, beginning of July. There's one site member who subscribes to an interesting cycle analysis service, and they're actually calling for the stock market cycle bottom to happen July 19th. So very late through what I would consider normal seasonal cycles. But nonetheless, that's into that sort of July window. And I'm sort of thinking the same thing with crypto. You notice on this Ethereum, from peak to breakout, new bull market, 32 bars there. From peak to breakout, new bull market, 32 bar, 33 bars there. From peak, and this is a tough one. I mean, do you take this peak? Do you take that peak? I don't know. But this peak to this ultimate pivot, W breakout, new bull market, 33 bars. Is it realistic to think from peak to new bull market, 33 bars? I think so. I don't think that's really crazy thinking. And then if we look at Bitcoin, same sort of logic, right? Sort of that was that sort of extended peak to ultimate breakout, new bull market, 34 bars. Peak to breakout, new bull market, roughly 30 some odd bars. This one, peak to new bull, 34 bars. That happened very quickly. So, just doing that same sort of analysis, peak, and what a coincidence, 34 bars takes us right into that July 4th weekend. I kind of think that that's sort of our path here. And as I sort of talked about, just kind of like this sort of study, if you're looking for, signs that, okay, the correction is done, we can start moving up. We want to see trend line breaks. We want to see W's in our momentum oscillators. We really would like to see W's in our MACD raw momentum histograms. And we're just not seeing that now. So it's not today. And interestingly enough, like I said, off of Bitcoin, if you just follow this simple L Tangonator setup, your target is actually 61, 6,200 here on OKCoin. Having said that, you can also see too, off of the daily basis, we're starting to get signs that the moving averages off of the dailies might turn back down here, which sort of, that's going to be a reiteration that, over the short term, the trend is still down. And frankly speaking, it wouldn't shock me. I mean, is it natural for assets to go from like, 3,000 up to 9,000 in a period of like 3 or 4 months? A triple? Is that natural? Is it healthy? Is it sustainable? Not really. So we're just going through a very natural, normal cleanup phase in the market. Okay, so that's basically my summary. I don't know how long I've been talking, but I'm sure it's been way too long. But hopefully you guys get a pretty good idea of what I'm seeing in the market right now. I would ideally like to see things like this NVT come down and W out. That'll be sort of fundamental that the market has pivoted. If I look at things like sentiment proxies, like spreads, you can see that we were going great guns, rah bull, and we've lost that sort of bull sentiment. Now we're emming out, and we're actually lost contango. So now, this was still okay. I'm still a bull. I'm still a bull. Now it's like, oh, now we're slipping into maybe I'm a bear. So, on sentiment wise, no signs of bottom here just yet. Notice how long it took for these W's to all form and come in. So there's no hurry here, I don't think. Could we get a counter trend rally here? Absolutely. Wouldn't surprise me at all. It'd be interesting to see if these lows in Bitcoin can hold here. I think Ethereum's already lost those lows. And it's, you can see there were those key lows. So we've dipped, I don't know how far we've dipped down here. We've come up against this low here just in the short term. Could we get a few days, because keep in mind the New York, London boys, they're going to want to get short off of these levels. Could we have a few days where maybe the market counter trend rallies back up into resistance here? Sure. Wouldn't shock me. Do I want to actually go short from these levels? No. As I told you earlier, Davos actually should be taking profits here. I might argue with regard to Bitcoin. And actually, I love this. Our level 1 instructor, you heard me talking about him earlier, Grim. He often will actually take the bot levels for trade management and apply them to even things like Altengonators, which I thought was really cool adaptation. So at this point, had you, there is 25 level, pretty tough to get short off of that level. I really do like the idea of being short off of here or anywhere in that area. But you can see move stop to scratch level has been hit. And so if this thing did ratchet back up here, I wouldn't have a problem if people just hopped off at scratch. If we do get that dump, as that I'm expecting, we're still in that channel. And a tag of this midpoint of the channel line hits 66%, then we can start thinking about moving stop to trailing, use 3 high-low method, that kind of stuff off lower time frames. But ultimately, its objective here is down 6,100 and change, that kind of idea. And, over the next, few weeks, would that be natural, normal, healthy to play out? Sure. Wouldn't surprise me at all. Okay, I think I'm going to leave the video at that for today, guys. I hope you enjoyed the offering. It is noon now. I think I've been talking for about an hour or so. Don't really want these YouTube videos to go on too long, or else it sounds like, people are, or actually YouTube now is kind of messing with the video. So I think we'll leave it at that. Play from a position of strength. Try to, how do we say this in just one sentence or less? Try to go through a process of figuring out what money you have to work with to risk, and then try to identify what type of risk taker you are. Try to find those W's, especially weekly W's. Man, they are so powerful. As I showed you on numerous occasions here. Super, super powerful concept. Don't chase. FOMO always just leads to problems. Ideally, we'd like to have 3 unrelated reasons to justify you risking your hard-earned money in the marketplace. If you're going to buy something ahead of time, clearly lay out what's the level you're going to buy at. Ideally, we want to do W's. You can do things like moving average tags too. That's not that big of a deal. As I showed you on things like 13 EMAs. It's a little bit more advanced though, no doubt about it. You want to maybe wait for like 13 EMA tags off of things like weekly charts and then go down to the daily charts and start hunting this kind of can I get a picture that looks like this? I think that's an excellent idea. Again, there's our W's. Hunt those W's. Try not to. I see a lot of people in the public do this, and it's a trap. Is they'll put on things like an RSI study, a stochastic study, and a MACD study, and they're all issuing buy signals, and they say, "See, Brian, there's my 3 unrelated reasons." But that's not unrelated. Those are all 3, RSI, stochastic, and MACD, all measure price momentum. They're actually basically the same thing. So this is why I really like the idea of trade location, fibs. Remember, I went through that whole illustration of the power of 78.6 levels. Moving averages, that's another excellent trade location tool. Then, look at your indicators, see if you can see signs of W's. Divergences are obviously the best. But Davos, W's, M's in both volume and price momentum oscillators is great indicator signal. And then finally, do I have some sort of structure? Showed you that Davo happened to fire off a fractal, but Bitcoin had a diamond, right? You don't see those patterns every day. Think M's and W's though. That's the easiest way to keep you out of trouble. Heads and shoulders is those kind of things. Do I have some sort of price structure that I can use to frame exactly where I'm going to get in and define where, if the market moves to a certain point, I admit that my thesis was wrong and I get out and live to fight another day. You can always do the nanny nibble approach, but if anything, this current market state is an excellent testament to why nanny nibbles are exactly that. They are for people that don't watch the market every day. They don't want to be bugged constantly by their brokers. Hey, you got to buy, you got to sell, you got to buy. They're just going in and buying off the bottom end of ranges and risking very, 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 very small percentages of their portfolio. But quite often with nanny nibble strategy is you might sit there doing absolutely nothing for a year or two while your market ultimately bottoms. And I've seen that happen lots. But at the end of the day, if your money is managed correctly on any sort of perking up of the market, as long as you have your sell half on a double orders working, nanny nibble strategy works wonderfully. Okay, that was one sentence, wasn't it? Okay, guys, I'm going to leave it at that. Everybody who's planning on coming to Vancouver, again, I need for you to fill out this matrix. TRIers that are coming to Vancouver, I emailed this out. I'll show everybody on YouTube what we sort of got planned. Let me know whether you need a place to crash. Let me know. These are all the different activities that we have scheduled. Let me know if you're interested in them. Still waiting on a few people that were shortlisted that basically said they wanted to come to fill out the information. Anybody that's on the site that's like, hey, I'm coming, but you forgot my name. I've left lots of boxes for you to fill out your information there. People who have their own housing but want to participate in activities, you can fill out your information there. And of course, locals, there's Shane. He's going to do everything because he's a rock star. But if you can poke Andrew, if you can poke Reza, Xavier, I know you're floating around somewhere. Tunjay, I know you're off in Surrey. If you want to crash at the house, feel free. But anyway, if you're in Vancouver, and then also too, I have a bunch of people that I haven't heard back from that said that they were planning on coming, but I haven't seen. The houses that we have booked, they're all clustered basically in the same area. Some really nice places, so we should have a pretty good time. And then activities, like I said, we've got a pretty full week of activities all laid out to have a really good sort of Northwest experience. By all means, if you're a YouTuber and you're not a site member, but you would like to participate, feel free to reach out to us. And you're like, hey, I'm going to be in Vancouver. Can I come out to the barbecue and introduce myself? Sure. That's what we're all about. We're PMA for the win. 1 + 1 = 3. I'm really about, us all working together, making positive relationships and friendships that hopefully we have for the rest of our lives. And it's so cool watching some of the students come into the program, make friendships, and literally they head off. Like the UK group, man, that group is so tight now. And basically they took the program years ago. The Netherlands group, that's another one. They are so tight. It's so cool watching Sjord sort of quarterback all their stuff. So, all right, I think I'm going to stop talking now. Have yourselves a great day, everybody. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.